Hello everyone, George DeSantis here with the look at the market for February 19th, 2016. Still have a frog in my throat, so you would excuse that, I'm sure. Let's take a look at the monthly chart of the S&P 500. So on the monthly chart of the S&P 500, let's take a look. What I find here is that we still have Kalman filter below the instantaneous trend line. We still have the parabolic above the most recent price bar, which is, of course, this month's bar, so a month of February. Uh, Something to note here is that on this monthly chart, we are seeing the formation of a hammer, indicating that this monthly chart may be hammering out a bottom or low for the month, for the monthly chart. So because the market opened here for the month, and so far it's closed here for the month. Now at the bottom, in the middle of the chart really, the MACD is still trending down. So, and at the bottom of the chart, L4's index is still below the zero line. So as far as the long-term trend is concerned, it's still down, but we're seeing glimmers of hope here with the hammer, okay? And we'll see how that fits into the analysis on the weekly and daily charts later on. Let's take a look at the weekly chart. On this weekly chart of the S&P 500, what we find is that the Kalman filter is still way below the instantaneous trend line. And since I use this as my trend indicator, as one of them anyway, the trend is still technically down. What we're doing here is trying to see if we have put in a bottom, and that's what my goal is here. Notice that we had a hammer here. We also made a lower low than this low, while at the same time MACD made a higher low than this low. So we had a bullish divergence of MACD. I wasn't too keen on getting into the market in any significant way until I see some more bottoming patterns, especially on the weekly chart. Well, I think those patterns are in place. As far as I'm concerned, we have this hammer, we have a double bottom, we have another hammer, and we have a morning star candlestick formation, which is a bullish formation. We have a bearish bar, we have a hammer, a small doji bar, and we have a bullish bar, pretty bullish bar. So this is a morning star bullish formation. Now, parabolic is still above the most recent bar, which would be last week's bar. However, we're trying to see what we should do at this point. We've been in this trading range here for some time, and now it looks as though we're ready to break out of it. At the bottom of the chart, the RSI 21 crossed above the 40% line. And if I recall correctly from what I've read on this, using a 12 RSI on a weekly chart, you hardly see a bearish market when this RSI is above 40%. Well, we should note that even though it broke above it here, it was a false breakout. Now we're wondering, is this going to be the real thing? Are we going to see a real breakout? Time will tell. Down here we have this bullish divergence on MACD. MACD ticked up a bit here last week, so that's interesting, that's bullish. And we see that percent R also ticked up from the oversold region of 20%. So all in all, this market is beginning to look as though we can begin to take some short-term risks at least. Placing stops or keeping very close eye on the markets or whatever stocks we own, so that we don't get beat up with an even worse market to come. Let's take a look at the daily chart. All right, so on the daily chart of the S&P 500, we look for the trend. What is the direction of a trend? Well, the Kalman filter recently crossed above the instantaneous trend line. It hasn't been above the instantaneous trend line since briefly back in December, at the end of December. So this is an indication that we have a reversal of a trend. In addition, the parabolic is below the most recent price bar. That's indicating that there is a reversal of a trend here, according to parabolic. We find that the Fibonacci retracement levels are now being approached, have been approached. In fact, price has hit the 38.2% Fibonacci retracement level and is now approaching the 50% level should this trend continue. If we're trading this, as I might do, on a short-term basis, for now anyway, I'm going to be looking out for some resistance at the 50% Fibonacci retracement level, which is also consistent with the 1950 level on the S&P, which many people have been citing as a resistance level. So we need to keep that in mind. Below the price bars, we have Jerry Appel's sum of the rate of change indicator. It's been below the 4% line throughout, as we can see, throughout this downtrend here. Recently, just last week, it crossed above the 4% line. That's interesting. That tells us that according to this indicator, it's signaling an uptrend, a change in the direction of the trend. So we have parabolic indicating a reversal. We have Kalman filter above the instantaneous trend line. And we have Jerry Appel's indicator above the 4% line. We have a bullish divergence of MACD on the daily chart. Let's look at the percent R indicator. Percent R is now once again above 50%. And during an uptrend, we usually find the percent R indicator above the 50% line. So in summary, the monthly chart is still in a downtrend, although we saw that there was a hammer, a developing hammer on the monthly chart. On the weekly chart, we saw many bullish indications. We saw a morning star, we saw some other indications. Let's take a look at it again so I could point out all of those things, okay? Let's get the weekly chart. So we can see on the weekly chart once again that we had this morning star formation, candlestick formation. We have two hammers, candlestick hammers. We have a divergence of MACD, and we have a crossing of the RSI 12 above the 40% line, which is usually consistent with an uptrend. So many of these indicators are now telling us we ought to be looking to go long this market. So let's look at another chart. That chart that Alex Elder sent us some time ago, the new high, new low index. And his analysis was that since we made such a dramatic drop on the new high, new low index below the minus 7,500 level, we ought to look for a cross back above the minus 4,000 level, and that would be a signal of a nice uptrend. So in addition to all the stuff we've been talking about concerning the shift in the trend direction of a trend to an uptrend, we have Alex's new high, new low index, which he claims is one of the best leading indicators, now above the minus 4,000 level. It approached it for a while, and now it's back up way above it again. So that's a pretty good indication that this trend might continue. And we'll take a look at one more chart, and that is the super charts, which shows us Alex's impulse indicator on the S&P. So we can see that for the past, on this daily chart, it is a daily chart, for the past few days, 4 days, we have green bars. And in fact, the day before that, we had a blue bar. So all last week, we had signals that we should feel pretty secure in entering the market again. Note also at the bottom of the chart here that bullish divergence of MACD that I pointed out on the earlier charts. So that's it for this weekend. I'm looking to buy the S&P again, buy some stocks. Haven't decided on which ones, but during the week I will. Have a nice weekend.